Insurance is normally a highly competitive industry, but in Myanmar, only recently opened to the international market, that competition is highly controlled. Joining me is Nyo Myint, Vice Chairman of IKBZ Insurance. Myanmar's insurance sector is transitioning from a state-controlled one. What's the story so far?
The 5 decades-long monopoly of state-owned Myanmar Insurance was ended with the establishment of 12 insurance companies, 6 life insurers and 6 composite insurers in 2013. Myanmar insurance market still remain imbalanced and highly controlled, with state-owned Myanmar Insurance as a dominant player. However, there are now 24 foreign insurance companies and brokers companies that have representative office in Myanmar. Among them, 3 companies are allowed to provide insurance business in Myanmar Tilawa special economic zones. In terms of liberalizations, the initial crucial steps have been taken, and the existing conditions seem to be right for accelerated development of Myanmar insurance sector.
What are the challenges on the path to full liberalization of the insurance industry?
At this point of time, the local insurance company are novice and need time to develop so that they can withstand the competitions. Therefore, the whole process of liberalizations has to balance opening up the market enough to bring in capital expertise and capacity of the foreign companies without letting the local insurers feel threatened with the entry of the foreign companies in near future. It must be a step-by-step approach. The regulatory body need to exercise more freedom in terms of these premium insurance products and the policy design and the premium pricing in such a way in order to avoid price wars and substandard coverage when the market opens up.
What legislation or regulation is needed to promote a healthy insurance industry?
The current regulatory body has agreed to make necessary amendments to existing policies. For example, the existing co-insurance model shares all the risks among the local insurers. It is important for the local insurance to have a way of measuring the risk and mitigate them by having the umbrella protection of reinsurance. Currently, we are tariff-based industries where price cannot be varied, leading to a uniform trend in pricings. The price needs to be determined with a focus on long-term sustainability. A coordinated approach will not only help to price a product better, but also in maintaining adequate financial reserves of a company.
What are Myanmar's demographics and what do they represent for the insurance industry?
Out of 51 million populations, more than 30% comprises urban class, and remaining 70% is large rural populations. More than half of the population comes under the productive population age bracket from 15 to 64 years. Having such a productive population and with more insurance penetration as expected in the future gives opportunity to domestic players like us to explore and take advantage of vast potential of these growing industries.
Of course, the biggest challenge for all industries in the country is ensuring a successful peace process.
The government is expected to urgently address a number of key challenges, and one of these is moving the peace process forward. The signing of the nationwide ceasefire agreement by all ethnic groups is a must to grab these opportunities. The peace conference renders a national development and human security a priority before anything else. These will definitely benefit our industries in a way, since we operate through length and breadth of the country.
Nyo Myint, thank you very much.
Thank you very much.
Thanks for watching. You can find out more about Myanmar's financial services at worldfinance.com. And please subscribe for more stories from Southeast Asia, as well as all the latest insights from World Finance.